Welcome back to the Mize Breakroom. I'm your host, Marc Swearengin, Director of Business Development and Marcom here at Mize CPAs. Today, we're talking about the One Big Beautiful Bill and what it means for business owners and taxes. This episode is a little different from our normal format. Shareholder Brent Rill joined us in the studio to talk about the One Big Beautiful Bill and how it may affect you and your business. Let's go ahead and jump into today's episode with Brent and learn more about the One Big Beautiful Bill.
So the Big Beautiful Bill, or also known as the One Big Beautiful Bill, is the new tax legislation that just passed. This really was President Trump's major initiative when it comes to taxes. When he was in his first term, he had a lot of tax provisions that he put in place that were very favorable for businesses. But because of the limitations in place at the time, a lot of those provisions had to be temporary and were only going to last for about 8 years. And most of them expired or were set to expire at the end of 2025. So the One Big Beautiful Bill is basically extending a lot of those provisions as well as adding several new provisions. So really, it's a big, beautiful tax bill. Super excited that we get to do planning for a tax bill that passed in the year that most of the things go into effect versus waiting until after the year and having to do planning after the fact. So with this runway that we have, I think it does give us a lot opportunity to think about how this affects you and make those changes in the current year before we get too far along. So when I've looked at this bill, it's really large. There's a lot going on here, and I don't really want to dig into all those details. I think it's around 900 pages in total. So, way more than we'll have time to cover today. You know, it's impossible to get everything into a bill because you've got to get everyone in Congress to agree, or at least a majority to agree. So, we couldn't get everything we want. I think we have been in the best tax climate that we've been in since I've been alive for the last 8 years. So really, it's hard to ask for too much more. So I think we're in a very good spot. But some things that would surprise me would be some of the credits that I don't see any harm in. WOTC probably being the primary one. The other one that surprises me a little bit is just expiring or removing all of the green energy credits. Um, Again, I understand that that was from a prior administration and maybe it's more politically motivated. But generally, I think trying to increase domestic production in any fashion is a favorable thing. So that surprised me a little bit. And those would probably be the biggest surprises for me.
In 2017, the Tax Cuts and Job Acts brought many temporary provisions. Brent explains how this bill is different.
So this bill is a little bit different in that most of the provisions here are permanent. They weren't able to accomplish that back in 2017 with the first bill. Again, kind of using the rules at their discretion, we're able to kind of play it a little bit different this time and got most of the provisions to be permanent. So outside of that, there really are some new provisions that add on to, but it isn't dramatically different than the original tax bill.
We've seen a lot of headlines about no tax on tips. Brent explains how this will work for employers and employees.
There was a lot of discussion leading up to the election as well as leading up to the passage of this bill, exactly what that would look like. And I think with all that discussion has come some misunderstanding of what the final rules really look like. And the wording itself, no tax on tips, I think is a little misleading because nothing happens when an employee receives a tip. They still have to have payroll taxes and withholding withheld at the workplace. This really comes in the form of a deduction when they file their income tax return on April 15th. So you're still going to be paying employment taxes, your Social Security and Medicare. You're still potentially going to have federal income tax withheld. but you will get this deduction. The deduction is up to $25,000. So it could potentially zero out all your tax income, or it might only be a portion, and it does get phased out. The phase out is at $300,000. So if you're generating a significant portion of your income through tips, you're probably below that threshold and don't have to worry about it. But there was a whole lot of discussion about various companies and industries and people just randomly thinking about taking tips to take advantage of this new provision. So, one of the specific rules there is that it has to be an occupation that normally um, takes tips in the customary normal business. So anyone like an accountant that's going to start taking tips, that wouldn't be customary. That's not going to qualify. The traditional things would be, going to a restaurant and sitting down and having a server wait on you, or someone coming for a personal service and offering them a tip to show your gratitude, a taxi ride, kind of get the idea of what those items will be. I do think this opens up some opportunity. I've seen a lot of quick service restaurants offer tips, but not all of them. Could we see some of those businesses open up the opportunity to take tips as a way of getting more income to their employees and a way of getting um, mostly tax-free income to their employees? So I do think that is something that our people should consider. Obviously, if you've got a franchisor that won't allow tips, we obviously don't want to do anything that's going to get you in trouble with your parent entity, but still something to consider if that is something that um, you're able to do. This is a temporary provision also, so be aware of that. It does start as of January 1, 2025, and goes through 2028. On the flip side, as the employer, we really do have to consider what that means for us, because there are now going to be additional tracking requirements and reporting requirements to make sure tips are kept track of, which we should have been doing historically. But now we're going to have to separate those out on a W 2 or a 1099 to allow your employee to tell exactly what portion of their income is coming from tips and would be eligible for this deduction.
Like no tax on tips, the no tax on overtime has also received a lot of coverage.
Think similar to the tips category, this has gotten a lot of discussion and some misunderstanding. Again, the deduction does max out at the same $25,000, phases out at the same $300,000 threshold for a joint filer. But the exemption is only on the excess pay above the regular rate. So traditionally, overtime is time and a half. That first one times compensation is not tax free. It's only that 0.5% surplus on top of the regular rate that really qualifies for the exemption.
Timing of this bill allows the opportunity for business owners to be proactive. Brent touches on what business owners should consider.
You should be doing planning with your tax preparer on an ongoing basis. And anytime that there is a change in effect, I think you've got to explore those options. Again, there are some very favorable provisions in here for businesses. So exploring what those mean for you and your company, and can it help you save taxes? Again, the really big ones that I think we need to look at would be the research and development. If you're in an industry that is doing R&D, those go retroactive, but we need to get on top of those sooner rather than later. So having those discussions as soon as possible, I think, are important to make sure you don't miss out on anything. They've introduced a few new concepts in this bill. So if these affect you, I think you'd want to be aware of them and start that planning now or as soon as possible. And the big ones that come to my mind are this new category of real estate that they've put out for us to get additional depreciation, and that's the qualified production property. And then I'm intrigued by the no tax on tips. And again, I think there is some opportunity for any industry that customarily offers tips, and whether this would be an opportunity to increase money in your employees' pockets by accepting tips or showing that it's reduced tax on that amount.
Brent has covered quite a bit already in this episode, but before we go, he highlights a few of the important provisions that are going to impact business owners.
As we're looking at how these provisions will affect your business and the planning that we need to do to make sure we're taking full advantage of these things for you. So, really, as I was leading up to um, Trump's election and passing of this bill, and concerned that a lot of the old provisions were going to expire and go away, there were really three items that were going to be huge losses to us, to the extent that I really felt like taxes for most of our clients would go up by about 50%. And the three provisions that were going to cause that were the loss of the qualified business income deduction, the bonus depreciation, and the higher tax rates. We've gotten all three of those renewed. So, really, our three big requests have been fulfilled, and that will pretty much affect all of our clients across the board. So, that really is a big win on the income tax side. Three other tax benefits that I think will benefit all of our tax clients, um, but maybe not quite as big as that first category, are the increased SALT cap going from 10,000 up to 40,000, as well as allowing us to continue to deduct the entity level tax payments would be the first item. The second one is not having to account for depreciation and amortization in our business interest limitation. And the third are these Trump accounts where we can contribute money on behalf of children that can grow tax free. The next category and summary that I want to look at is, I think, big help, but to limited clients. If you're in the right industry, these could be a major impact for you. So I really do think some planning needs to be done around these areas. And that is the full expensing of our R&D, or research and development expenses. There are some retroactive provisions that we need to be aware of. So if this is something that you could take advantage of in the last few years, let's revisit it. The second item is the new qualified production property. Again, the ability to expense that property 100% in year one is very intriguing. So if we get anything that fits into that category, we should be taking advantage of that. And then the third one is that no tax on tips. Again, intriguing to see if there is an opportunity to have some added benefit to our employees, and if that's something that can make you look more attractive as an employer. I think is certainly something that you need to take advantage of. The last category that I'm kind of looking at are the things that this bill didn't cover. There are a few things that we wanted answers for, or we wanted extensions to, and we haven't gotten them. So, where should we be looking going forward from here? I think there has already been discussion about an extenders bill, which is a bill that has kind of happened every time some credits are set to expire, that just renews those. The biggest one is probably the Work Opportunity Tax Credit, or WOTC. That has already received some discussion, but at this point, that's all it is. And there has also been discussion to either wrap those extender credits into a complete second tax bill, similar to what we just got, or do it separately as just an extender bill, which has traditionally been done here over the last few years. Again, specifically looking at WOTC, that really is a win for the business owners that get a credit for hiring disadvantaged individuals, and then obviously being able to work and earn income for those disadvantaged individuals is also a benefit for them. So keep your ear to the ground. Really hard to know. The initial thought was we were only going to get one shot at this, and that's why they called it the One Big Beautiful Bill. But because talk has already started and there are missing some of these credit provisions that truly are beneficial, I am still holding out hope that something does happen. But until they truly pass a second bill, we can't count on those provisions, unfortunately.
We'd like to thank Brent for the overview of the tax provisions in the One Big Beautiful Bill. The combination of extended benefits, new opportunities, and the removal of certain deductions brings to light the importance of proactive tax planning. If you are interested in learning more about the One Big Beautiful Bill and how it may impact your business, please visit micpas.com/OBBB or find the link below in the show notes. For questions, please feel free to email breakroom@micpas.com or reach out directly to me, Marc Swearengin, or to Brent Rill. We'll see you next time in the break room. Thanks for listening to another episode of the Mize Breakroom. If you watch this episode on YouTube, please like and subscribe so you never miss another episode. You can find the Mize Breakroom anywhere you can find podcasts. If you like what you heard, please rate and review the podcast 5 stars. Looking for more information? You can find us on most social media platforms at Mize CPAs. Thanks for listening and see you next time in the break room. The Mize Breakroom is produced by Mize CPAs and hosted by Marc Swearengin. Mize CPAs is not a law firm and does not provide legal advice. The information shared in this podcast is for general information purposes only and is not intended to constitute legal or technical accounting, tax, consulting, and/or professional advice that may apply to your specific business. The listener is encouraged to consult counsel and/or their accountant before making decisions or taking any action concerning the matters in this communication to address the recipient's particular facts, circumstances, position, business considerations, or other unique relevant matters, as well as to evaluate any applicable federal, state, or local laws.